Chairman of the Bangalore branch of the Institute of Chartered Accountants of India, and my good friend Mr. Ravindranath, my esteemed council colleague Mr. Santana Krishnan, Chairman of the Corporate Laws Committee. He has been continuously associated with the Chairman of the Corporate Laws Committee for the last 3 years. He has been a member of the Rule Making Committee, contributed a lot to the cause of the profession, not only as the Chairman of the Corporate Laws Committee, but in various other initiatives of the Institute. I am very happy that he is here in Bangalore. A warm welcome to you, Mr. Santana Krishnan. Mr. Nityananda, a former Central Council member and currently a cooperative member of the Corporate Laws Committee. Mr. Suresh Yenapati, the most popular CFO in the country today, but when it comes to institute activities, I just have to pick up the phone and tell Mr. Suresh, you have to be here on Sunday, and he says yes. That's the kind of love and affection Suresh has for the profession. Thank you, Suresh, for having joined us this morning for a session on the Companies Act. And all the distinguished members present here, all the senior members, it's nice to be amongst you again here in Bangalore, because most of the time I am outside the city. Maybe in a month, Suresh Yenapati is asking me, Raghu, how many days you are in Bangalore? I just told him, sir, I am just there for 4 to 5 days, just to come and pack my bag and leave again. The kind of schedules we have as a vice president going around the country is huge. But yes, it's been a great experience, a challenging experience, and I would like to thank each one of you here, because if I'm here as the vice president of the Institute, all of you, every one of you here have played a very important role in supporting me and electing me to the council. Having said this, coming to the session today, we thought it's an opportunity for us to have the Secretary, Ministry of Corporate Affairs, Mr. Joseph, who will be joining us a little later, for an interactive session with the members of the Institute. Then Mr. Santana Krishnan requested me, Raghu, why don't we do a program here? I said, fine, sir, it will be nice. And at a very short notice, we have organized this program, and thanks to all of you for having joined us on a Sunday morning, in spite of a hectic tax audit schedule. Friends, what I would like to do is the next 15-20 minutes, very quickly take you through a small presentation as to what we at the Institute are doing on the Companies Act. Because the Companies Act 2013, as Mr. Nityananda very rightly said, has thrown a lot of challenges for the profession, for the Institute. And yes, as an apex accounting regulator, we have a very important role to play to ensure that the interests of the professionals, interests of the Institute are taken care of. Right from the time the Companies Act the Companies Bill was passed by the Rajya Sabha, we have been meeting the various officials of the Ministry of Corporate Affairs. We have met the Minister many times. We have expressed our concerns to him. But only thing which I would like to say is that the Minister, Honorable Minister for Corporate Affairs, Sachin Pilot, has been extremely proactive. He's always assured us, he has said that Institute is a part of the Ministry of Corporate Affairs. We are very keen to see that your interests are taken care of, and whatever suggestions your members have, your Institute have, you please give it to us, we will be able to consider it. This is a feel-good factor what the Minister has said. Having set the background, friends, as you are aware, it was passed in the Lok Sabha on 18th of December, Rajya Sabha on 8th of August 2013. Long time for the bill to be passed, and today the Companies Act has 29 chapters, 470 sections with 7 schedules, against 658 sections and 14 schedules of the Companies Act. Substantively, it's a law based on rules, because in various places in the Companies Act, maybe as many as 336 places, it says as may be prescribed. So there's a lot of importance being given to the rules that has been put up, the draft rules have been put up for comments, public comments. And we at the Institute have set up 20 study groups across the country to study the rules and the various provisions of the Companies Act, so that we could give a comprehensive memorandum to the Ministry of Corporate Affairs. Yes, the new law was needed very badly for India, considering the way India is growing fast. We are on the fast track of economic growth, changing stakeholders' expectations, the regulators. Yes, there are a lot of changes that is expected from them, from the investors. And the number of companies that have increased in India, 1956 we had about 30,000 companies, but in 2013, 11 lakh companies. are there, and there's need for a framework that is robust, that is good, that can be benchmarked with other countries around the world. I think this is a step in the right direction. The Ministry of Corporate Affairs has taken the lead to bring out these new legislations. Some of the new concepts that have been brought out in the Companies Act is 33 new definitions have been introduced in Section 2. Private company to have a maximum of 200 members. Earlier it was 50. One-person company has been introduced as a concept. And they've also brought in e-governance, which I think is a very good step, permitting companies to digitally maintain their records. Inspection also of documents by the companies also in electronic form. Section 177 talks about whistleblowing, a vigil mechanism that has been introduced, and the fact that yes, one woman director to be under Section 149(1) is prescribed. There is also a restriction on the layers of subsidiaries, Section 287. Financial year of the company to be aligned from April to March. A 2-year time frame has been given to all the existing companies to align to this particular new timeline. Memorandum not to have any other objects. And yes, a person cannot be a director for more than 20 companies instead of 15 as provided in the Companies Act. And out of this 20, he cannot be a director of more than 10 public companies. Another new concept is shareholders who have an exit option if the money raised has not been utilized by the company. Of course, CSR is one big new initiative that has been introduced in India, and we need to see how exactly CSR will be implemented, how the companies would see that the CSR initiative reaches out to the society. The concept of independent directors, the definition has been introduced in Section 149(5). Then in addition to this, a company can also make buyback, even if at any time in the past there has been default in repayment of deposit of interest, redemption of debentures of preference shares, payment of dividend. But of course, the default must have been remedied, and a period of 3 years must have been lapsed after such default ceased to exist. I think that's a good step. Condition and manner for issue of bonus shares also been introduced, a new concept. New provisions suggested for allowing reopening of accounts in certain cases with due safeguards, consolidation of accounts, secretarial audit report by a company secretary in practice is required to be attached with the board reports. Coming to the regulation, we have 3 new things coming in. The National Financial Reporting Authority, known as NFRA, shortly it's NAFRA, that's how we call it in the concept. National Company Law Tribunal and Serious Fraud Investigation Authority. These are the big 3 things that will affect all of us very directly. When we talk about SFIO, the investigation into the affairs of a company by the Serious Fraud Investigation Office can happen in 4 situations. When they receive a report of the registrar on inspection under Section 208, on intimation of a special resolution passed by a company that its affairs have to be investigated in public interest, or request from any department of the central or state government. This is the 4 situations where investigation can be ordered into an affairs of a company by SFIO. Wide powers have been given to SFIO in the Companies Act, and SFIO's report is to be treated as a report filed by a police officer, and SFIO will have powers to arrest in certain cases which attract punishment for fraud, and person accused of such offence shall be released on bail. So huge penalties have been prescribed for fraud-related offences in this particular SFIO. Then we have the NCLT, the National Company Law Tribunal, established by the central government through notification, consisting of the president and judicial and technical members. And any person aggrieved by an order of the tribunal may prefer an appeal to the appellate tribunal, and no appeal shall lie to the appellate tribunal from an order made by the tribunal with the consent of the parties. NFRA, something that concerns the institute, concerns all of us, wherein in addition to the accounting standards that are currently being formulated by the institute, as you are aware, the accounting standard of the institute is formulated by the Accounting Standard Board. It goes to NACAS. The NACAS reviews and approves it, and finally it is notified by the central government. So this process would continue, but instead of NACAS, you'll have NFRA coming in. So the entire activities of NACAS would be handled by NAFRA. But in addition to this, the auditing standards of the institute that is formulated by the Auditing and Assurance Standard Board again will now move to NFRA. Formulation would lie with the institute, NFRA would review it, and it will be notified by the central government. So NFRA is something which we have given our views to the ministry, and we are also submitting our views since the draft rules have been notified very recently. The central government may prescribe the standards of accounting or any addendum thereto as recommended by ICA in consultation with and after examining the recommendation made by NAFRA. As I told you, it's very similar to the current scenario. The powers of NAFRA are, some of them are similar to what is being done by ICA currently. Monitor and enforce the compliance with accounting and auditing standards. They will ensure whether the members are compliant with the auditing and assurance standards. They would also oversee the quality of professional work. Quality of professional work has been a concern whenever we interact with the regulators, let it be Reserve Bank of India, coming to the quality of bank audits, CBDT, quality of tax audits, has been a concern with the regulators. So the NAFRA will oversee the quality of service of profession associated with ensuring compliance with such standards, and they have the power to investigate into the matters of professional other misconducts committed by any member or a firm of chartered accountants, and the penalties would range between 1 lakh in case of individuals and 10 lakh in case of firms. And they also have power to debar the members of firms for a period of 6 months to 10 years. This is what NAFRA says. And the appellate authority constituted under respective act shall be deemed to be the appellate authority against an order made by NAFRA. This is another change that has been brought about. What are the challenges before the profession because of Serious Fraud Investigation Office, NCLT and NAFRA? These are the 4 things which I have identified. Challenge A is the audit and auditors. Challenge B would be voluntary revision of financial statement. Mr. Nitya has already touched upon it. Class action suits and definition of fraud, which will have a major impact on the profession. And 4th one is NAFRA. As far as the voluntary revision of financial statement by the board, section 131 of the New Companies Act talks about voluntary revision, and the fact that the original auditor should not be asked to give either consent or dissent. We have said that the ICI should be consulted before taking a decision on the voluntary revision of financial statements, because it's a very serious matter, and the very thoughtful consultation should be made by the Ministry of Corporate Affairs, because there are a lot of ramifications in case of foreign investors who invested money based on the accounts that were already adopted in the AGM. And what we are trying to say that yes, to begin with, maybe voluntary revision of accounts to be restricted to a certain category of companies with high share capital and reserves. But yes, we are trying to collect the opinions of the members across the country, and we would, the institute would make its recommendation to the ministry once we get all the suggestions from the members. Talking about concerns on CSR, 2 things. As Nityananda said, it's an opportunity for all of us. CSR audit could be an important area where all of us could offer our services. We at the council have taken a decision that 100 firms of 100 audits will be done by the members of our firm free of cost. Way forward, as and when the ministry requires our services, we would like to offer our services to the CSR activities of the various corporates. This is just to demonstrate our commitment that yes, we as a profession are also keen to support the CSR initiative. Then coming to audit and auditor, section 139 to 148, number of changes has been brought about. Every company shall at the first AGM appoint an individual or a firm as an auditor who shall hold office from the conclusion of that meeting to the conclusion of 6th annual general meeting. Compulsory rotation of individual auditors every 5 years and audit firm every 10 years in case of listed companies. And in case of other companies, they have said that it will be prescribed. So that is something which we are trying to find out and tell them to keep certain companies out of audit rotation. There will be a transition of 3 years for us to move into the audit rotation regime. Globally, audit rotation has been a big failure. I was in New York last week and there was a presentation by various jurisdictions about audit rotation. All the countries, USA made its presentation, the European Union, Australia. Audit rotation has not taken off. I think our country would be one of the first jurisdictions around the world where audit rotation would happen. We need to see how audit rotation would be a success in India. But yes, they've given a 3 years transition for companies to look at audit rotation. And then the members of a company can resolve for rotation of an audit partner and also for audit to be conducted by more than one auditor. And when a company constitutes an audit committee, all appointments, including filling the casual vacancy of an auditor, shall be made after taking into account the recommendation of the audit committee. This is another change that has been brought about in section 139. Appointment is done once in 5 years. Ratification is to be done every year. So there is a confusion between the words ratification and reappointment. More or less the terms need to be, looks like it's the same, but yes, there's some clarification required from the ministry. Mandatory retirement after 5 years in case of individual and 10 years in case of firms. No auditor or audit firm having common partner should take audit for a consecutive term of 5 years. After 5 years have been covered, this is another important change that has been brought in. Auditor, audit firm and audit firms having common partners shall not take up any audits for a consecutive term of 5 years after 5 years have been completed. That's very, very important for you to keep in mind. And it's applicable to all listed companies. And again, companies of such class as may be prescribed is still an open door for the ministry to decide which are the other class of companies that will come in. And a person at the time of appointment or reappointment holding appointment as auditor of more than 20 companies shall not be eligible for appointment. And in case of LLP appointed as auditor, only chartered accountant is allowed to act and sign on behalf of the firm. I think members are aware the institute is now permitting you to set up LLPs, and it is possible for you to convert your existing chartered accountancy firm into an LLP firm. You could also create a new LLP firm. And now with the passage of the Companies Act, it becomes all the more easy for you to get appointments directly in the name of your LLP. And we have been witnessing a lot of firms converting to LLPs, and we see a lot of activity happening in this particular new vehicle that has been brought about. Multidisciplinary partnership is also allowed as per the new Companies Act, but yes, there are concerns. We had a coordination meeting recently between the Ministry of the Institute of Chartered Accountants of India, Company Secretary and the Cost and Works Accountants. Until we evolve a model that is suitable for all the three institutes, multidisciplinary firms should still not take off. That is my apprehension, because right now there are certain concerns. We had a very detailed debate for more than 2 hours at the office of the Institute of Company Secretaries. As of today, multidisciplinary firms are permitted in the Companies Act, but until we bring about the sort of changes around all the three institutes' regulations, this might be difficult. When we talk about the concerns on the rules, audit rotation should be applied only for public listed entities, maybe based on net worth or share capital. And we're also saying that rotation should be restricted, maybe sole proprietary firms should be out of rotation, because India as a country has maximum number of sole proprietary firms. If you take the profile of the firms in India, 98% of the firms are sole proprietors or partnership firms having 2 or 3 partners. So we are very keen to protect the interests of the small and medium practitioners. So we are trying to tell the ministry that there should be a distinction between small firms and the big size firms, but yes, still to give our final recommendations to them. And we are also telling that the cap of 20 companies should exclude one-person companies and also private companies. And we talk about the definition of relative, it should include only relative who is financially dependent. So these are some of the things which you have said. Fraud is something I would not like to go into great detail, but yes, huge ramification. Mr. Krishnaswamy was just discussing this morning about the fraud, because here, when there's a fraud, the duty has been cast on the auditor to report to the central government on an offence involving fraud which is being or has been committed against the company by officers or employees of the company. So this is something, a huge responsibility of the auditor. Only thing we are trying to tell the ministry is that we want them to follow what we have talked about fraud reporting in line with the auditing standards issued by the institute, because right now under the Companies Act, an auditor has to report on the fraud committed on the company by the management, and external people also committing the fraud on the management. A lot of clarity is required on this particular role of the auditor here. So I think there needs to be a debate, there needs to be a proper framework set in as to what kind of reporting an auditor has to do on fraud. Expectations are very high, but we feel as an institute it's very difficult for auditors to report on each and every fraud that is taking place. But yes, this is a concern area. The new Companies Act also says these services are not to be provided: accounting and bookkeeping, internal audit, design and implementation of financial system, actuarial services, investment advisory services, investment banking services. Any other kind of service as may be prescribed, again they have kept it open. This we are not very comfortable. What we are trying to say is that management services should exclude 25 items which are permitted by ICA. ICA permits you to do certain kind of activities, doesn't permit you to do certain kind of activities. We are telling the ministry, please follow this, and we will come out with a prohibited list of activities which our members cannot do. We have told them that we'll come out with a negative list of services which our members cannot do, so that members could follow this. So we also need to have clarity on the application of services rendered outside India, differentiate public interest entities and others, and wherever possible, we would like to say that all the services prohibited to be specifically defined, so that members don't end up with issues with the disciplinary committee. And in case the auditor contravenes the provisions related to his powers and duties providing service under 144, then in addition to punishment provided in the section, he should be required to refund the remuneration received by him. Yes, the next one talks about partner or partner audit firm. The firm should be jointly and severally responsible for the liability, whether civil or criminal as provided in the Act. This again is a huge ramification, because it talks about joint and several responsibility of the firm and all the partners. Yes, this is a matter of concern. And if it is proved that the partner or partner audit firm have acted in a fraudulent manner or abetted or colluded any fraud or relation to or by the company or director of the company, they should also be punished in the manner in section 447. I think this is something very, very huge responsibility of the profession. Then, as I told you, the definition of fraud is too exhaustive to cover the auditor, so there's some clarity that is required. We're just working out as to how best we can arrive at this clarity. Penalties and fines are too heavy and not commensurate. Yes, this would call for auditors to go for insurance. Mr. Krishnaswamy, you are selling the audit services, the cost of the audit services would go up, because everyone have to step up their audit, kind of documentation required. We need to step up with audit quality. Cost of audit services go up, and all of us need to go for insurance. And what we have also said that we have also asked that an opportunity to be provided to the auditor before imposing any penalty. They want to impose any penalty on the auditor, an opportunity should be given, is what we are trying to say, so the rule is concerned. And as far as the small company and OPC and government companies, we have said that the formats are too large. We are looking for a simple and small format. And we also said that a check on OPC funding and formation is required to ensure that KYC and prevention of money laundering and illegal activity doesn't take place. Opportunities, internal audit, CSR audit, official epidemic registered valuer, internal audit, such class of competition is required to appoint an internal auditor. Yes, cost accountants are also there, but now internal audit is mandated by law under 138. Registered valuer is another opportunity for our professionals. Official liquidator, section 275, wherein is another opportunity for us, and CSR audit would be another final opportunity. Friends, these are some of the concerns which I thought I should discuss with all of you, try to sort of bring to your knowledge. Yes, the intention of this program today is to get a feedback from you, because we are in the process of receiving feedback from across the country. We're getting a lot of mails, we're getting a lot of calls from our members expressing concerns, asking us as an institute to take up these issues. We thought this interactive program would help us to understand your concerns. We'll map all these concerns. The chairman of the Corporate Laws Committee, Mr. Santana Krishnan, would try to see how best we as a profession, as an institute, represent before the ministry and try to see how best our profession is protected, our professionals are also protected. With these few words, I'm very, very, very happy to see all of you today, and I'm sure we'll have a very fruitful discussion today, this afternoon. And feel free to write to me anytime and pick up the phone, send me an email. It's just not limited to this interaction. The next 20-25 days, you're very, I would request you to please send in all your suggestions to us, so that we'll be able to map all the suggestions and try to make a proper presentation to the ministry. Thank you very much.